Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. Here are a few images from my life in a remote village in Thailand. These images are available on my website superiorprofit.co on the images page. Greetings, I am Sagar Nandi, active trader in the USA and global markets. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use only Q systems for my trading. It runs on Metastock and TradeStation platforms. By the way, there is a storm going on where I live. It is not uncommon for the electricity to be off because of the storm, and if that happens, this stream may terminate. I apologize for that in advance in case that happens. But let me hope that does not happen for the next 30 minutes or so. Charts of instruments that often move the market. US dollar ETF UUP. The weekly backdrop color is remaining bullish. Daily now has a trend line support and we have a bullish indecision cluster. I'm continuing with my view that I shared in past several weeks since the time price went here and made a new higher high. What was that view? That view is that it would pull back but create a higher low. So far it is creating a higher low and I'm expecting it to go up. Even more so because now we have a trend line support and the bullish indecision cluster, and if it indeed does that, that may put pressure on the market. Mega cap custom index remaining very strong tremendously influences the market, made a new all-time high for the week. Daily has many trend line supports. Even if it comes down from here, it will not be easy to short anytime soon. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. We are continuing to have the two Hindenburg omens and then irrational exuberance for 2 days. Those were the 2 days when small cap stocks rallied. But then on Thursday, Friday, the small caps pulled back a little bit. I shared some strong bearish divergence in the weekly interval for the different breadth charts. I tweeted about that. Let me go to the tweet, but before that, notice that earlier here for a long time, growth was growth was doing better, outperforming value. For the last couple of days, growth is starting to underperform little bit. And for this period, small cap was doing worse. Here large cap was doing here large cap was doing better, and for last few days again small cap is turning down. So small cap growth is now underperforming. That is something to keep in mind, because many of Q traders are high growth stock traders, which tend to be small to medium cap. Many small cap stocks are there in that group. So small cap growth is starting to underperform. Let's look at the tweet to notice the bearish divergence. The tweets are on my X page. Superior Profit is the handle. This was the tweet. I shared both weekly and daily interval. And from this week, you will notice that I am using different major indexes. I am using S&P 600 for small cap, S&P 400 for mid cap, S&P 500 for large cap. So we are covering all the three pockets: small cap, mid cap, large cap, and Nasdaq 100, which is most influenced by mega caps. Notice one thing, that for small cap, it hit 3-month new high low upper extreme, from where a pullback was likely. The pullback seems to have started. As of Friday's close, large cap and Nasdaq 100 both are hitting the extreme high point for 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in breadth charts. Almost always, or you may say even always probably, that whenever it hits the upper extreme, it pulls back. What pulls back? Not necessarily the entire market pulls back, but the stocks that are resulting in this 3-month new high low hitting upper extreme level, those stocks invariably pull back. And you may find lucrative shorting opportunities there. The market may also pull back somewhat because of those leaders coming down. Now this is the daily interval. On Metastock, you can see the interval here. D is for daily. You could also find the interval here. D for daily. The same chart, if I now see using weekly interval, W for weekly, I will highlight the strong bearish divergence. The candle charts themselves were going up, we saw that, but see the advanced decline as well as up down volume. Across the board for small cap, mid cap, large cap and Nasdaq 100, all of them are having severe bearish divergence. And as I always say in the slide that starts the breadth discussion, that usually the market follows internal health, not the other way around. Large cap and Nasdaq 100 is hitting extreme overbought condition because of mega caps. Mega caps we saw were outperforming hugely, but under the hood a lot of stocks are selling off with high volume. That is something to be considered, not to be ignored. And that was a look at the bearish divergences in major indexes, multiple pockets. Let's look at the composites. For Nasdaq, we had the irrational exuberance Bango, thanks to Mr. Ian Woodward, who developed these signals. May him rest in peace. And the confirmed Hindenburgs came in NYSE. We also see that 3-month new high low is hitting extreme overbought condition in NYSE. That's also a cause for concern. Notice again the index charts, that is of Nasdaq composite and NYSE composite. NYSE composite is NYA, Nasdaq composite is IXIC. These are daily charts. They are steadily going up. Now let me show again the bearish divergence in the weekly interval. Whether, okay, here at the weekly interval, same charts. Whether we look at advanced decline or up down volume for both Nasdaq and NYSE, it is rapidly coming down, though the candle charts are steadily going up. Those are strong bearish divergences across the board, and that may not be ignored. After internal health check, let's look at the external view of the market. This is how most people around the globe see the market. Start with SPY. For this week, made a new all-time high, very much in an uptrend. Just like I commented for the mega cap custom index, even if it pulls back, we don't have any easy shorting opportunity because multiple trend line supports are there, then the ascending yellow direction line. QQQ also made a new all-time high on a closing basis for the week. Strongly going up, will not be easy to short it anytime soon. DIA on Friday, it made a new all-time high right at the open, probably influenced by the news on United Health that Berkshire Hathaway is taking a stake in the stock, has taken a stake in the stock. As per news media, that's why the market rallied. Dow Jones Industry has rallied more because UNH is part of that. But you can see right at the open, it started to go down and in fact close below the memory trendline resistance, thereby creating a false upside breakout. That is a bearish signal. In the weekly also, at the watermark resistance, it has created a false upside breakout. And here, unlike for QQQ SPY, the trendline support is far enough away that allows us to take bearish trades in underlying stocks. In fact, on Friday, using the pivot chart, I took a short trade in DIA. Let's look at the pivot chart, 5-minute interval. As I saw that it had the potential to create a false upside breakout, and then it gave me a gap short day trade setup. I took a short trade in DIA at that time, and when it hit previous day's close, briefly turned negative, my risk distance was covered and I booked profit in the trade. These gap day trades work even better when we have the weekly daily aligned with that, as was on Friday for DIA. Of course, there is no short setup in DIA itself for swing trading, but that's the difference between swing trading and day trading anyway. I would not mind taking short trades in some of the industrial stocks that are weak fundamental stocks in weak industries and that are giving low risk short setup after looking at this false upside breakout in Dia. Dia itself, of course, again does not have any short setup. IWM, like Dia, it also breached the nearby resistance. That was the watermark resistance in weekly and also daily. And unlike Dia, it actually did not create a false upside breakout. It actually closed above the watermark resistance. But if on Monday it starts to come below the watermark resistance, that will create the false upside breakout, and here also the the support is far away, so I would not mind shorting some of the small cap stocks, and again I would like them to be 360 degrees trades, weak fundamental in weak industries with low risk short setup. So these are the two pockets where I would not mind shorting, but the other two pockets, large cap stocks, mega cap stocks, tech stocks in QQQ, I would not like to short right now. Let's look at mid cap MDY ETF. Mid cap is also underperforming, and here it created a false upside breakout very clearly. However, here the trend line support is nearby, then there is the yellow direction line ascending and another trend line support. So using Q techniques, I am allowed to short only in instruments where the support is far enough away. How far away? At least as far as the stop loss, and that is possible only in Dia as of Friday's close, and it will be possible in IWM, or rather constituent stocks, not in Dia but constituent stocks and IWM constituent stocks, if it starts to come down on Monday. More market level analysis. QH has bucket analysis, works like a clockwork. Difficult to find a short-term swing trading reversal signal that is more accurate than bucket analysis when it hits the extreme, and it happened once again few days ago. It was oversold, and I mentioned that it was the market was, and in this case the market goes up. I expected the market to go up. I expressed that opinion in live market review, market recap before knowing the results, and market indeed went up. Thanks to Dr. Jeffrey Scott again, I just made it 100% real time. It also has sector industry stock breadth. It shows where the market came from, where it is now, and where it may go next. And we'll find some interesting insights from there also today. Bucket analysis. A while ago, it was oversold, then it went up, and now it is in fact bullish. 56% of S&P 1500 stocks are above mid Bollinger Band. It's neither overbought now nor oversold, but it is bullish. But let's try to figure out where it may go next. A short while ago, when the bucket analysis was showing oversold condition, all these pie charts were red, mostly red. Now the longer term interval has turned bullish, 1 month and 10 days both. This week has also turned bullish. But 2-day period and 1-day period, those have turned bearish. This helps us anticipate where the market may go next, and I am anticipating that it may turn down further in coming days, and that is aligned with my looking for short trades. Not yet, but looking for short trades in industrial and small cap stocks. Is there further confirmation of that? maybe from technical breadth in Q Finder, we only profit by buying stocks going up or shorting stocks coming down. I did share a buy idea last week. We'll see soon how that played out. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Q Finder, the weekly is still bullish across the board, the technical breadth. But I'm interested more not in knowing where it is now. We can know that for sure where it is now. But I'm more interested in anticipating. I cannot know that for sure, but anticipating where it may go next. Q Edge was telling it may turn down next, and daily technical breadth has turned bearish across the board, and that is telling that it is okay to look for shorts, especially if next week market starts to come down. Why am I not looking for shorts as of Friday's close? Because as of Friday's close, the market is mixed. Market level summary, the most important trading decision is whether and where to buy or short, or whether to stand aside. What do I mean by market is mixed as of Friday's close? When I look at two pockets, large cap and QQQ, most influenced by mega caps, lots of stocks in both those groups, they are not allowing me to short. Industrial stocks are allowing me to short, and small cap stocks are not yet allowing me to short, but may start that allowance next week. That's why I am not ready to short yet as of Friday's close. As of Friday's close, we have to say that the trend is intact unless it is broken. I don't expect the trend to be broken anytime soon, but there are many reversal trade setups in Q, and I will not mind looking for some of the extended stocks to reverse and look for lucrative shorts in that. I'll go through some of those stocks. May not have short trade setup as of today, but I am watching because they are overextended. Review of last 2 weeks trade ideas. I shared only one trade idea. That's what I usually do. It's not to provide trade tips, but to show a robust technique in action, live action, before knowing the results. Last week I shared PFS, a banking stock, finance stock. I shared it on this day. That was a pullback long setup. Stock in an uptrend, pulling back to support, starting to go up from the yellow direction line. That would be the entry point, the close of Friday, or if you took it on Monday, just above the high of previous Friday's close. Stop would be just below the trend line support, which would also be just below the yellow direction line. So our risk distance would have been this much, and as price went up, we covered much more than the risk distance, and once again the trade closed with a sizable profit. That it is falling on Friday is of no importance really to me. I'm a short-term swing trader, and Q guideline is that once the risk distance is covered, we start booking profit, and the trade once again closed with a nice profit. This week's trade ideas. Let me first look at some stocks that are looking overextended. I start with one stock, CoreWeave, that I shared quite a long ago in one of the market recaps. Whenever a stock that goes up like a rocket, I am watching it. Why am I watching CoreWeave more than other stocks? Because actually it was a loss-making company. It is still probably a loss-making company, but it was going up. Why? AI name is associated with it. It has substantial product and services, but it was nonetheless a loss-making company. Any stock that goes up like a rocket like this without making profit may eventually come down. It indeed come down just like a rock. This was actually the day before earnings. recent most earnings. After that, it fell sharply again. This is what happens when a stock rapidly goes up. Isn't it amazing that the unique bearish headwind reversal signal came right near the very top in the daily chart? You could look to short at that point of, or if the short setup was not confirmed, as I always say, the first bearish flow after the bearish headwind that gives a low risk short entry, that is a short entry point. So this would be the appropriate choice going by that, not this one, because though this had a bearish flow, it had a lower candle. So that would not be the right choice. The right choice to enter short in CoreWeave would be this one. It was probably hard to borrow in several trading platforms, including TradeStation, but you could trade it using put options. You could use long put vertical, you could also use short call vertical. That would be a very profitable trade. But that was that. I came to this example to show that stocks that go up like rockets, especially with poor fundamentals, those come down as a rock. I'm going to show a few stocks that are noteworthy. EL is one. Why it is noteworthy? It has a bearish indecision cluster in weekly. Usually that leads to a pullback in the stock, though it itself is not a short setup. I also notice a pattern that is very valuable for me. It has generated a lot of profit for me over the years, both in the long direction as well as short direction. Here we are discussing a stock that could be a short candidate because it is at jump thrust high, went up very fast at price extreme high here, and then came a big move down 3. Somebody sold a lot on Thursday. On Friday, it went up a little bit. On Thursday, it did not give a short setup. Firstly, because it had a long lower tail, and also if we applied the checklist conditions on weekly daily, there was no short trade setup. But I noticed this pattern: jump thrust high, price extreme high, somebody selling a lot. I am watching this stock. If it starts to go down, it may give a low risk shorting opportunity. I'm not going to go through its fundamentals and industry score. You may look at them. Out of the 3 stocks I'm going to show, if you see any of them or some of them or all of them may be fundamentally weak in one way or another, you could consider shorting them, provided the technical setup comes first. Next one is Unity Software. It rallied quite a lot at jump thrust high, at price extreme high. It did not have a big move down 3. However, I noticed this very large bearish candle, and using Zenith I found out that was due to earnings. Earnings was on this day. It fell opened very high, fell sharply, gradually crawled back to the same level and stopped right at the trendline resistance. We have watermark resistance in weekly. If it reverses from the trendline resistance, it may give a low risk shorting opportunity. Stop could be just above the trendline resistance. So this is another stock noteworthy. This also does not have a short setup as of today. The third stock I am going to show is COOP, Mr. Cooper. This one shoot up quite fast, but notice that 1, 2, 3, 4 weeks in a row it has long upper tail. Though it is going up, it is encountering some selling at the top. That is not a short setup. But now I notice that on Thursday it displayed a bearish headwind at the very top. I don't ignore that. On Friday, it tried to go up but fell very sharply throughout the day. Here it is at jump thrust high, price extreme high, and somebody has already started to sell heavily at the top while it is going up. Support is far away. So this is a third lucrative shorting possibility. At the very top, it is possible probably to short using naked puts because the volatility tends to be lower and the puts may be cheaper. But none of these are having any short setup, and I am not ready to share any short idea yet. So what is my trade idea for this week? That happens to be a buy candidate. BHVN, Biohaven, and here I am turning my analysis upside down. For the few stocks I was showing, jump thrust high, price extreme high, big move down 3. Now I am showing a stock that is at jump thrust low, price extreme low, and somebody is stepping in and starting to buy a lot. After a long time, in fact after this week, which was here sometime between April and July, this is the first week we have a bullish shape, bullish color weekly candle. And after successive big move up 3, this is the first day when price broke out decisively off from all the trend line resistances. There is no trend line resistance nearby. This is probably given multiple buy ideas. There are different ways of knowing that. Of course, once you use Q systems, you get used to reading the chart. For a beginner, using Q Global, we could look at the commentary that reads the stock just as I would read. I loaded more data, but no problem. It has a breakout long setup. At price extreme low, bullish fan out pattern. If you go down, it will have other signals that are displayed on the chart. Now, a relevant question is, how did I find this stock? That is as important as trading a stock, probably even more important, because we have to find this stock first. And I found it in a few seconds using 100% real-time top-down analysis using Q. Let's do that. Top-down analysis starts with Q edge. I looked at the market as of Friday and I saw the strongest sector by far was healthcare, up 0.8%. Only comms services was the other sector, up by a feeble 0.2%. Healthcare was by far the strongest. So if I was going to buy, I would like to focus on this sector, healthcare sector. Notice the overall market didn't have a bullish tone, but healthcare was hugely outperforming. So let's go to the sector scorecard to see how healthcare was showing over longer period. Sort by 1 day performance. Now it is even better because it is the strongest sector, but it was very weak earlier. That means it is a turned around sector as well. Okay, but not all industries in this sector may be strong. So let's look at the industries in healthcare sector. One click drill down. You can see some of the industries in healthcare are very strong. some of them are accelerating. Using one click, I can find the ones that are either strong or accelerating. Some may be both. Next step is to look at the underlying stocks in only these industries. Another click. From all the liquid stocks in the USA market, I am left with 228 stocks, but I want to buy stocks that are only up on Friday, left with only 152. I want fundamentally strong stocks. It's not such a strong market, so let's look for one star green that is either undervalued or high earnings growth. Click the one star green. Left with 83 stocks only now, starting with thousands of stocks, 100% real time, top down analysis. I'm not going to look at 83 stocks. I'm going to see using one click how many of them have proper potential Q buy setup, not signal setup. Left with 13 stocks. What comes to the top? Biohaven. That's how I found Biohaven. Now let's look at its one page scorecard. We know it is going to be one star buy candidate at minimum. Indeed it is. High growth stock, earnings growth is improving. I like the case that insiders are buying. Notice at the very bottom, jump thrust low, price extreme low, we saw a big move up 3. Somebody not like me was buying right at the bottom before it started to break out, which happened on Friday. That explains why insiders were buying. And though Friday market was not very strong, 75% of PR stocks went up in the biotech industry. How is the industry score itself? We know it will be strong or accelerating. That's how we started the top down by, but now I'm going to go back and see, yes, it is indeed strong, and in fact it is accelerating also over 5-day period, a turnaround industry. That's my buy candidate then this week, Biohaven. But I am aware of the possibility that market may pull back, and if that happens, Biohaven may give an even better buying opportunity. So I don't have any position in the stock. I'll be happier in fact if it opens lower on Monday, maybe because the market opens lower, and then on pivot chart, real-time 5-minute chart, it starts to go up. Then I may have a better entry point for Biohaven. And if it opens down, continues to go down, of course I'm not going to buy the stock. I don't have any position in it, but that is my trade idea for this week. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost any other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I am quite confident shows there is no reason not to do that. Trade profitably. Thank you.